Moving averages for swing traders, guys. What's going on? Welcome back to another video. Bit of a whiteboards wizards one, sort of, but we're going to be looking at some charts in this one. Now, as we know, swing traders, what do we look for in the market, guys? What do we always look for in the market? We want to swing from highs to lows. That's our target, okay? Highs to lows. We want to swing from zone to zone, right? But how do we know whether we are getting back on board of the train that's moving, or how do we know we're hitting a rejection and the market's turning around? So this is where we kind of can start using EMAs. Now, there are a lot of different moving averages, not EMAs, sorry, just in general moving averages. There are a couple that we look at, people tend to look at. We have, most of the time for swing traders, we're looking at SMAs, all right? SMAs. Now, that's a simple moving average. I'm not going to go too much into depth of it. Anish has already done a video on how moving averages work, so go check that out. It's one of the older videos on the channel, so go have a look at that, all right? Now, simple moving averages. Like I said, there are a couple that swing traders tend to be looking at. There is the common 50 moving average, and then there's the 200 moving average, okay? And these two are based off of a cross, or you know, the 200 moving average shows us the trend. Let's draw it like this. So for example, 200 moving average shows the trend, and 50 kind of gives us entries for when the market is looking to bounce off of, all right? So that's kind of how these two work, all right? But they're for really big term trades, and they don't really show you the closer knit pieces, like, you know, they don't show you turnaround points in the market, or which tends to be a bit difficult. I mean, by the time the two have already crossed, you know, you're already too late in the market sitting up here, and you've got a massive R&R, risk-reward ratio trade, okay? Now, in saying that, guys, we have to use our technical analysis beforehand, okay? In my, you know, in a bit of experience, guys, generally speaking, it's going to be extremely difficult to trade based purely off of indicators. Because why? Indicators are lagging, that's why. They only show past data, right? They don't show you the now, where technical analysis can show you a bit more of in the now. Now we're currently sitting at a support. Now we've broken a support. Now we're looking at resistance, okay? Where EMAs were saying sort of we did go past, we did reject, okay, that's a thing, all right? So that's kind of what we're looking at, all right? And sometimes if we take into account of, you know, our moving averages, we could potentially say, okay, well, it broke a moving average, right? We broke below a moving average, and now the market's going to push down, but then we neglect to see a massive support, for example, showing up, okay? So how do we use moving averages? Now, the moving average I'll be using is not going to be a 50, it's not going to be a 200. It's actually a very interesting one. It's very commonly used, and people tend to neglect it. It's used in Elliott Wave as well, and it is the 8 simple moving average, okay? That is the one we will be looking at, and that's the one you guys can already see here on my chart. Okay, now let's have a look. Let us have a look and see sort of how we can use this. Okay, we'll have a bit of look. We'll have a look at the structure up over here, and we'll also be looking at the structure. Now, I'm looking at the daily time frame. I'm using this indicator, this moving average, on a daily time frame to help me identify a bit better whether we're breaking, whether we're retesting, or what's happening in the market. Okay, so we'll look at this move here to the upside. Let's zoom in, okay, and we'll look at this first move to the upside, right over here. Okay, pull this guy down out the way so we can see our support / resistance zones. Okay, let's draw up our support and resistance. Okay, we have got resistance, support, we've got a zone roughly right about here. Okay, we have another one up over here. Okay, and we have a very messy zone. I'll draw it, I don't know how I'm going to draw this one. We'll call this the bottom of the zone, and we'll call this the top of the zone. A very messy zone in the market. I think that's fairly straight, guys. I think that should be fairly straight. All right, so those are the zones if you guys want to keep a look at it, and then we'll move them, get rid of them, and see how we trade, and I'll redraw them as we move them, okay? All right, now let's have a look. Okay, so we've started a new trend. We've got a double bottom, okay? Let's say we didn't take the trade based on the double bottom because there was obviously a lot of momentum in the market to the downside. And we've now finally got our first break of the zone and coming back down. Now, here's the bit of an issue, guys, right? Without this indicator, what do we see? We see a double top, a fake out of a double top. And swing traders, we want to trade from zone to zone, right? That's how we want to see. So we've got zone at the top, we have zone at the bottom, we see rejection at the top, we want to trade it to zone. But we have a bit of an issue, okay? Bit of a little issue. Well, let's get our helping hand. We don't know. Is this structure over here, because we can see there's a bit of a sort of consolidation zone up in here. Is this structure going to break, or is this structure going to drop? Okay. Now we know a general fake out. Speaking in general fake outs, we have consolidation. We have a candle to the upside. We have a candle to the downside. And we have a move down. Now what we look for in a fake out is we want to see a rejection of that top zone and a push down. We have that. Candle up, candle down. We have a rejection of that zone. Let's look for a move down. Okay, so a lot of technicals indicate we're either going to be going up or going to be going to go down. Let's try and see if we can find the odds in our favor. Let's use this small 8 simple moving average. Okay, let's have a look. So we have our top zone. We have our bottom zone for this area we're stuck in at the moment, and we have our little moving average. Okay, there's our moving average. We'll get rid of that just because we're focusing on mainly on this area right over there. Okay, that's the area we're focusing on. So now let's have a look. Are we going to the upside or are we going to the downside? Now, what I found with this little moving average, the market, if the market on the daily term time frame stays above it, we're going to be generally moving to the upside. Now, we do have exceptions. Obviously, we're not always going to be right. As long as we manage our risk, we should be fine. But generally speaking, most of the time, the market stays below it. We're generally going down until we see a break of that zone, and then the market will give us rejections. And again, we've got some struggles here, and we go to the downside. Okay, but let's try and use this as to our advantage. Okay, so we've got 2 zones. Now, what do? Do we wait for it to break to the downside before we look to take a move and we try and figure out to put our stop loss? Do we wait for it to break to the upside and try and figure out maybe we should get a massive stop loss and we're going to have a big take profit target somewhere up? You know, we can see that's already not really ideal. Maybe the top of our take profit, obviously, because we can't see what's going here, what's happening here. Maybe we can get maybe a 2-to-1 out of it, okay? Which is not bad, all right? It's not bad, but let's see if we can get that even better. Let's see if we can get an even better entry point, okay? We're using that little indicator. What we saw here is we saw this candle, the green candle, I don't know if you guys can see it, the green candle closed above that EMA, which means we can see the market's crossed it now. We've used our technical analysis. We don't know is the market going up, going down. We've got a support. We know there's a support. We can see it. We crossed the EMA. Now we know. Let's use this moving average for entries. All right, let's use this for an entry. Take our entry, stop loss below that low, and here goes the market. We can see we already cut out a fair bit of potential risk. So entry, we went from up here to down here, which gives us this one was already a 2-to-1, and this one will be just over a 3-to-1 risk reward ratio trade. Okay, now let's look for re-entries of this market. Okay, now this is the reason why we generally don't trade, because of what we just see on the EMA. Okay, this is why, because now we have our little EMA moving, right? We have a close above it. Let's take a trade, pop below here, we blow it. All right, we get stopped out. Again, close above, take a trade, stopped out, and finally we get one. Okay, now how can we avoid all these little ones? Technical analysis, right? Let's have a look and see where our zones are sitting. We see here we've got support. We're in a zone. You see the wicks touching that support zone? There's our zone, guys. There is our zone. Okay, we've got a bottom zone and we've got a top zone. And we see, look at this, a break and retest. There's our support, previous resistance. Let's see if I can draw this a bit straighter for you guys. Previous resistance. Okay, we've got a break. We have a break. have not yet a retest, okay? Don't just follow the EMA blindly. We have a retest. We have a move closing above the EMA. We have our stop loss target. We have our entry area. And we can look for take profits along areas, okay? Let's have a look and see where we could have potentially taken profit over here. So we know where entry is, we know where exit is. Let's have a look and see where we could have taken profit. Okay, so we have a high, which it didn't reach, unfortunately. We also have an internal support zone, where we did reach very nicely. And we have this structure right over here. It's not very straight, guys, but you guys, this one's maybe a little bit lower. There we go. Okay, so entries, where were we? Entry, TP target number 1, just over 1-to-1, and a 2-to-1 risk-reward ratio trade. We could have potentially gone to 3-to-1, but unfortunately it didn't play out as well. But there it is. Nice, clean move to the upside. Let's use our EMA again. Let's use our simple moving average, our little simple moving average again. We have 2 areas of potential market rejection. Okay, is it going to reject here? Will it reject on this resistance? We're above the EMA. Probably not, right? Are we going to see a rejection here? Right? We just closed below, big candle closed below the EMA. Yes, there's our rejection. Let's start looking for it. Okay, so now let's use our technical analysis. Last little one, let's use our technical analysis to look for a trade. So zooming in on here, let's get rid of this. What's going on? Technical analysis, let's find that little top of ours. We know we've got this rejection zone with this candle. There's a rejection. We have an internal support zone. We see it over here. What do we look for as trend reversal? We look for lower highs, a new lower high to be created. But when is that lower high being created? Right? We can always look for normal technical analysis, head and shoulders, or any sort of rejection zone where we see, right? There's our zone. We got resistance, we got support. Now we see rejection, right? We broke past, we see rejection over here. We don't have anything. We've got a close below the zone. We've got another close below the zone, right? Remember, there's our bottom. Here's the bottom where we took that trade. Remember, there's our support. Okay. Now we have entry number 1. We can see we rejected. Is it going to reject? Is it a new lower high? Okay. Or is it just a bit of a retest to go further higher and break this top? We've got a close below our EMA. There's our entry. Stop loss I would put fairly a little bit above because we can still come test. It's a very tight zone. So I put it fairly a little bit above just to play it safe. Take profit targets. We've got resistance coming up. More resistance coming up. Support coming up, support coming up. We have more support coming up. Right? When do we know when we should take the trade, close the trade? Okay? We can have preset take profits, 3-to-1, 2-to-1, or we can also manage the trade. We reached our zone. Do we close the trade? We're below the EMA. Obviously not. Next one. Do we close the trade? We're below the EMA. Obviously not. Next one. Over here. This one over here. Do we close the trade? No. We're below the EMA. Alright? Below it. Right? Below the EMA. Now we start to see some rejection. Do we close it or is it going to break? Okay, we get a bit of a break. So we say, okay, let's hold on to it. We see more rejection. Boom. Let's call it here. There. Okay, let's say we were a little bit later on closing it. Is it our close? Yes. We're above the EMA. There's our close. We rejected on support. We're in a consolidation zone. We don't know what's going on. Close the trade. That's, guys, is how I like to use an EMA, my 8 simple moving average, alongside, which comes first, technical analysis. Guys, that's how I use my moving average with my technical analysis, guys. Thanks so much for watching. Don't forget to like, subscribe, click the bell icon to get notifications of our new videos. We have a whole Elliott Wave series coming out, guys. Stay tuned. Trade safe.